Yeah, mixed results here from the company, which has clearly been in the eye of the crypto winter storm. Revenue coming in above estimates, meaning, as Sherry said, it lost less than expected, but transaction revenue tumbled. Trading volume, of course, was a big miss, as we said, down 23%. The CFO has mentioned or left the door open that there could be more job cuts ahead. They talk about how expenses are now more aligned after they slashed jobs to cut expenses late last year as the stock fell precipitously. So it could be the story of diversification, where Coinbase is now not relying entirely on trading revenue, is what has been propping the stock up after hours.
Yes, you heard that correct, folks. Coinbase beat both top line and bottom line estimates from Wall Street, resulting in a very stark perception of the future of this company here in 2023. Yes, Bitcoin is up almost 45% since the start of the year, but when it comes to regulation, there's still a lot of uncertainty. That's creating a little bit of a cloud around Coinbase's very impressive earnings report, and that is exactly what I want to break down in this video. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So, to start things off, let's explain why Coinbase could have beat both earnings and revenue expectations by a relatively strong and healthy margin. You guys know I am long Coinbase only because I see it as a good exposure to Bitcoin and crypto. It is down exponentially more than Bitcoin is over the past year, and there's a very high likelihood that also translates to the upside over the next few years if we are near the crypto bear market bottom. And I hate to say it, but there are some really obvious reasons why Coinbase's earnings beat could have been predicted. Most of Wall Street and social media had been fear-mongering ahead of time how poor Coinbase would report, how the stock would be down significantly, how their losses would have widened, and how their transaction revenue would fall more than 70% year over year. And although that is true, that should have been expected if the crypto market cap is also down 75% over the past year. As a matter of fact, the start of this year, Bitcoin spot volumes have already hit a new one-year high, as obviously we're seeing more volatility around Bitcoin, which most people did not expect. And so Coinbase's transaction revenues being down 23% on a quarter-over-quarter basis is absolutely no surprise, because Bitcoin in that same time frame is down 55%. As a result, the market has already priced in that pain ahead of time, and now it's more about focusing on the next 6 months and seeing how Coinbase will recover from this bear market. And there's a couple of really important reasons why I think the recovery going into next year will be very strong for cryptocurrencies and also brokers like Coinbase. First of all, this bear market cycle is coming to an end, at least for Bitcoin. As we've already known, Bitcoin runs in a 4-year cycle, where you first get a lot of consolidation, followed by a breakout to the upside, then a distribution phase, followed by a very aggressive bear market. And although history does not repeat itself, it does tend to rhyme. At the very start of Bitcoin cycles, we obviously saw extreme volatility to both the upside and the downside. But as the network has matured and as an investment community has been built around Bitcoin and cryptos like Ethereum, the volatility to both the upside and the downside is going to be reduced. But the patterns do tend to be similar. And as we all know, going to halving years, which included 2016 and 2020, prices tend to do quite well. And for those saying Bitcoin is a worthless piece of crap, well, the network value transferred would like to disagree. The network has stayed resilient throughout 2022, even though the price has come down 70%. This actually was not the case in 2018 and 2019 during those bear market cycles. This is exactly what's going to set in state. This means that blockchain as a technology is actually catching up to markets and the value proposition is taking off. Even if volatility in the short term is reducing the price per Bitcoin, over the long term, the value is being built right now. And obviously after the collapse of FTX and now the scrutiny from Binance, Coinbase is really the only trusted exchange for trading cryptocurrencies, which obviously is a very important value proposition of this blockchain technology. For Coinbase as a business, the transaction revenue fell more than 60% for the full year 2022, but they've made sure to cut costs in the right directions and pivot their business to make sure they can survive this bear market without burning through a lot of cash and potentially diluting their shareholders. And a big validation of that pivot is their subscription and service revenue, which, as you can see, grew by almost 25% from 2021 last year. And particularly this was driven by their interest income on their USDC coin, which obviously is the stable coin mimicking the US dollar. That revenue grew from $25 million all the way to $330 million for the full year of 2022. And why exactly is that important? Well, first of all, this is a really high margin service revenue. There's nearly no cost associated with the interest income Coinbase as a company earns. And second of all, it's a great way to hedge in a high interest rate environment. Meaning, as risk assets fall, including Bitcoin and crypto prices, and people rush away into bonds and safer assets, Coinbase can still recuperate growth of revenue despite transactions falling. As interest rates go up from the Fed, which have caused crypto prices to come down, Coinbase is actually going to earn more revenue on their USDC coin. As a result, just in the first quarter of this year, they expect subscription revenue to be almost $325 million. That is up from almost $90 million this time last year. And not only that, to boost profitability and improve the bottom line, they've also cut their transaction expenses by a pretty significant amount in Q4 versus Q3. Particularly, their percentage of revenue as a form of transaction came down to almost 14% in the fourth quarter from 18% in Q3. And as you can see, a big reason why this happened is because they optimized some of their transaction services, meaning they reduced expenses even if they're increasing the revenue, which means their margins are going to expand. And really the best part about Coinbase's management team is that they're able to give very accurate forecasts to Wall Street to make sure there's little to no surprises. This was clearly seen by the fact that in the full year 2022, just back in February, they gave a guidance of around $500 million in negative EBITDA for the full year 2022. And as you can see, in reality, their adjusted EBITDA came in around negative $370 million. Now, obviously, this is on an adjusted basis, so there are some tricks they can pull to make it look like a better number. But the fact they were able to predict that about a year ago is a very good sign for investor confidence in the long term. And unlike a lot of other companies in the crypto space, they're not actually hitting the gas pedal on their marketing efforts, which obviously have taken a hit because of Bitcoin's lower price. As a percentage of net revenue, their sales and marketing has gone down from around 18% in peak in 22 to around 15%. And their obviously transaction expenses have fallen from 24% to 14% as of the end of last year. And even though R&D is obviously important in the space of blockchain, their tech and development has stabilized throughout 2022, meaning they're not spending like crazy in a time when they're actually unprofitable. Instead, they're making sure they're saving cash for the next time we see the crypto bull market, during which they can actually continue to hit the gas pedal on R&D and SG&A. And so yeah, even though on a full year basis on the right, their expenses look really bad, that's because they only started cutting costs in the second and third quarter of 2022. So on a trailing 12-month basis, you're simply not going to see the results of those cost cuts. And in terms of cash, the company is not trading too expensive on its price to cash per share ratio. They have plenty of liquidity to survive the next 2 years, and they've been through these bear market cycles multiple times in the past. And like I said, their current ratio of 1.1 is over-exaggerated because of the fact they had to show their customer assets on their balance sheet. As a matter of fact, their real current ratio or ratio of liquidity is around $6 or $7 instead of 1.1. And so bottom line for me is, even though the outlook for the rest of the year is going to be uncertain based on what markets do from a macroeconomic standpoint and what happens with the war in Russia, I think Coinbase has a bright future for the next 2 years, especially at the current prices. That's just the play I am making to bet on the future of crypto. So let me know your thoughts down in the comment section below. And as usual, thank you very much for watching.